Welcome back to Investing Talk Podcast. Today, we're doing an in-depth analysis based on the source material you shared with us. And it all boils down to one pretty compelling question about a company many of you are watching closely. Is Joby Aviation a good time to buy right now? We're going to unpack the fundamentals, look at the technicals, and size up the key catalysts. And hey, if you're getting value from this conversation, please do hit subscribe, like the video, leave a comment. We really thrive on your feedback. Seriously, if there's a specific company you want us to examine next, just drop its name in the comments below. We'll put it under the microscope.
Absolutely. And Joby Aviation. Well, it's fascinating. It sits right at that crossroads of aerospace innovation and this whole new urban air mobility idea, the eVTOL sector. What makes it so, intense right now as an investment case is that they seem to be moving past just R&D. We're starting to talk about, early commercialization. And that shift, it completely changes the game for valuing the company's future.
Yeah, the analysts certainly seem to think that shift is coming and coming fast. I mean, looking at the projections you pulled, the revenue growth figures, they seem almost, unbelievable.
It's more than just growth. It's like hitting an inflection point, something that really demands attention. Sure, Joby is largely pre-revenue in the, let's say, traditional sense, but the consensus forecast analysts have, it points to maybe $5.85 million for fiscal 2025.
Okay, $5.85 million. Sounds small, but compared to what?
Compared to 2024, it's a huge jump. We're talking over 4,200% year-over-year growth. Astronomical, really.
Right, over 4,000%. That sounds amazing, but let's be real for a second. That number, it's based on analyst models, right? And future approvals, not actual sales yet. What's the risk if they miss that, relatively small $5 million target next year?
That's the crux of it, isn't it? With any pre-revenue high-growth stock. If they miss, it's not just about the revenue number itself. The market could read it as a failure in their timeline, maybe problems with certification or just not being ready operationally.
Okay, so high stakes on hitting even that first small number.
Exactly. But if they do hit it, it provides huge validation for the entire eVTOL concept. And the growth doesn't just stop there. Projections show revenue potentially jumping to $53.780 million in 2026. That's another, 817% growth on top of the first jump. So this curve, this exponential curve, it shows the market's pricing in a successful shift from testing prototypes to actually launching.
Okay, if that revenue trajectory somehow holds up, what about the bottom line? Usually that kind of explosive growth means they're just burning through cash like crazy.
Oh, the cash burn is definitely real, no doubt about that. But the loss trajectory, it's actually looking like it might stabilize. And that suggests maybe some improving operational leverage, getting more efficient, basically.
Operational leverage, meaning they're getting better at turning investment dollars into potential future revenue.
Precisely. The expected loss per share for 2025. It's projected around minus $0.86, pretty steady year over year. But analysts see that improving in 2026, maybe to around minus $0.78 per share. So that slight improvement, even while they're trying to scale up, it suggests they might be managing costs with an eye on those commercial launches.
And for a company basically building a whole new type of transportation, they need a mountain of cash, right? How does the balance sheet look? Is it clean?
That's actually one of their major advantages right now. Their financial health, they have a very clean balance sheet, no significant debt obligations to speak of.
Really? No debt?
Not significant debt, no. Unlike a lot of older manufacturers who are loaded down with it, Joby has substantial cash reserves. And this flexibility, which they got through, smart capital raises and these strategic partnerships, it's absolutely essential. It funds that long, expensive FAA certification process and the initial production ramp up. It really lowers the immediate risk of them, collapsing financially if there are short-term delays.
Okay, let's switch gears a bit. Let's talk competition. This air mobility space, it feels crowded, lots of ambitious startups.
Yeah.
What's Joby's actual defensible edge, their moat?
The biggest barrier, the primary moat, really, is their lead in the eVTOL certification race with the FAA.
The FAA certification.
Exactly. Commercial aviation is regulated like almost nothing else. Joby seems to have a multi-year lead in hitting key milestones like stage 3, and they're approaching stage 4 or 5.
Yeah.
That creates an operational advantage that's just incredibly hard for newcomers to match. Getting regulatory approval isn't about having a cool prototype. It's a grinding, potentially multi-billion-dollar hurdle.
Okay, that lead is significant.
Yeah.
But they still need to actually build thousands of these things reliably and make the network function. How do the partnerships fit in there? Do they handle that risk?
The partnerships are basically how they outsource chunks of that execution risk. Look at Toyota.
Right, Toyota's involved.
They're a strategic partner, but it's not just about money. Toyota brings world-class know-how in high-volume efficient manufacturing, supply chain management. That seriously de-risks the jump from making just a few prototypes to mass production while keeping that aerospace quality control.
Okay, manufacturing muscle from Toyota. What about the airline side?
That's where Delta Airlines comes in. Again, not just money. Delta offers the commercial launch infrastructure. They bring operational expertise, scheduling, training crews, maintenance, and critically, access to their existing high-value customer base. So these alliances, they combine manufacturing power with operational experience. It's much stronger than what any single startup could likely manage on its own.
Interesting. But Joby's also taken this path of vertical integration, right? Controlling core stuff like batteries, software. Isn't that the opposite of outsourcing? Does that risk slowing them down when they need to scale fast?
It's definitely a trade-off. It carries more capital risk upfront for sure, but the upside is technological differentiation, control. By developing and controlling things like their electric propulsion, the flight software, they aren't dependent on outside suppliers for their core tech.
Ah, so they own the secret sauce.
Basically, it helps guarantee performance, security, and lets them iterate faster on their specific, complex aircraft design, much faster than competitors trying to just piece together off-the-shelf parts. It keeps their unique tech proprietary.
Okay, let's shift to the market's view. How are the technicals looking right now? You mentioned the stock price.
Right. As of October 17th, 2025, the stock was trading around $15.50. And what's telling about that price is it's sitting, well, a pretty robust 48% above its long-term trend line, the 200-day simple moving average. That's currently down at $10.45.
48% above the 200-day. That definitely confirms a sustained bullish trend, suggests institutions might be accumulating. Is that backed up by shorter-term indicators?
It seems to be, yes. The technical picture looks quite strong. You've got the Golden Cross formation still intact.
The Golden Cross, where the shorter-term average crosses above the longer-term one.
Exactly. The 50-day over the 200-day, it's a classic signal, often confirms sustained bullish momentum, suggests it's not just random noise. Institutional buying often underlies it. And on top of that, the 14-day RSI, the Relative Strength Index, it's sitting around 59.46.
So RSI measures recent price changes. 59.46, that's not quite overbought yet, right? 70 is usually the level.
Correct. It's pretty much neutral territory. Which means, technically speaking, there appears to be room for more upside momentum before you'd typically expect selling pressure based on, technical exhaustion.
So with that bullish technical setup, what's the immediate risk-reward look like for someone thinking about getting in now?
Well, the technicals seem to suggest a likely trading range, maybe over the next 3 months or so, somewhere between $14.15 and $18.50. And importantly, that 200-day average down at $10.45, that acts as a pretty substantial downside cushion, a kind of line in the sand for managing risk.
Okay, but there was some recent volatility, wasn't there? A stock offering.
Yes, absolutely. We have to address that because it's kind of the source of the current tension, maybe opportunity. In October 2025, Joby did a big underwritten stock offering, raised about $591 million in fresh capital. Now, getting that cash is obviously good for their runway, extends their operational capability, but the market hates dilution.
Right, dilution. Issuing new shares makes existing shares less valuable, basically. That triggered that sharp, 9% drop?
Precisely. It's a necessary evil sometimes for development stage companies, but yeah, the market reaction is almost always negative in the short term.
Any other headwinds recently?
Well, there was also about $7.2 million in insider selling by directors that surfaced. And insider selling, even if it's pre-planned or for diversification, it always sparks some market speculation. People wonder, why is leadership selling if things look so great?
Sure, optics aren't great.
Right. So those two things definitely created some temporary market tension. But the key point is the underlying technical uptrend seems to have absorbed that shock and held firm so far.
Okay, looking ahead then. The next, say, 0 to 3 months, what are the absolute critical catalysts we need to watch?
For the next few months, the number one driver, hands down, won't be financials. It's all about FAA certification progress updates. Any official announcement confirming they've hit a major milestone, especially reaching Stage 4 or, the big one, Stage 5 certification. That would instantly validate years of work and investment. That kind of news would likely trigger significant upward price movement. The market is essentially holding its breath, waiting for that regulatory green light.
Makes sense. Beyond that big certification watch, are there specific dates or events on the calendar investors should circle between now and, say, January?
Yes, two main ones. First, around November 6, 2025, we should get the Q3 2025 earnings release. Now, like we said, investors aren't really focused on tiny revenue numbers yet. They'll be laser focused on the commentary.
What kind of commentary?
Updated guidance on certification timelines, the cash burn rate, how fast they're spending that new capital, and any news on the partnerships. Delta, Toyota. What management says will be way more important than the actual Q3 numbers. Then, looking into January 2026, around the 10th, we get the institutional 13F filings.
Ah, the 13Fs, where the big funds have to show their hands.
Exactly. These filings reveal what the smart money, hedge funds, big institutions were doing in the previous quarter. Buying. Selling. Changes in those large fund positions can definitely trigger volatility, either reinforcing the bullish view or maybe casting some doubt.
And given this is such a forward-looking sector, there's always buzz, right? Any interesting rumors or speculation floating around that could potentially surprise to the upside?
Well, the biggest ongoing one is always about the FAA type certification timing itself. Most analysts are modeling full certification later, maybe 2026, even 2027. But if any credible rumor suggests it could happen, say, late this year, 2025, or very early 2026, that would be a massive shock to the upside.
What about commercially? Any expansion rumors?
There's sometimes chatter about potential international expansion deals, new airline collaborations, maybe beyond Delta. The global market for this is potentially huge. Landing a major European or Asian partner that would open up a whole new addressable market.
And military applications.
Yes, that bubbles up occasionally too. Speculation about possible government or military uses for the eVTOL tech. That could offer a different, maybe high-margin revenue stream, less tied to consumer travel cycles.
Okay, before we try and wrap this up with a final rating, let's be really clear about the risks. Apart from just needing cash, what's the single biggest threat to the whole Joby investment story right now?
It really all comes down to certification timeline uncertainty. That's the big one. This whole process is ultimately controlled by the FAA, and they are, historically, very conservative. Safety first, always. So if certification gets delayed significantly beyond what the market is sort of implicitly expecting, say it pushes out into 2027, 2028.
Sentiment would tank.
Absolutely. Sentiment would suffer badly. And delays mean they probably need to raise more capital, which means more dilution, hitting shareholder value again. And we shouldn't forget the manufacturing execution risk either. Toyota helps a lot, but building aircraft at scale is just inherently complex and difficult.
Okay, so putting it all together, massive, almost unbelievable growth forecasts, but they hinge on this unpredictable regulatory process. How do we balance that huge potential upside against the very real risk of delays?
The final investment thesis, pulling directly from the analysis of the sources, comes out as overall bullish. Let's call it an 8 out of 10 rating.
An 8 out of 10, that's pretty strong given the risks.
It is, and the justification is that compelling asymmetric opportunity. The potential reward seems to outweigh the risk profile. The downside risk feels somewhat contained by that technical floor around $10.45, and the fact they just secured a lot of capital. But the magnitude of the potential upside, that 4,000% plus revenue inflection if they succeed, it justifies taking on that certification risk. Success here isn't just incremental, it likely leads to a complete fundamental re-rating of the stock's value.
Okay, an 8 out of 10 bullish rating based on asymmetry.
Yeah.
So for an investor listening right now, maybe thinking about taking a position, what's the recommended strategy or approach based on the source analysis?
Well, for the short term, say the next 0 to 3 months, Joby looks highly attractive for more tactical positions. You're basically playing 12 months out. That seems like the optimal window to potentially capture that big commercialization inflection point, the one driving growth through 2026.
And tactically, any specific price levels mentioned?
The suggested strategy from the material is to look at establishing a core position somewhere in the $14 to $15.50 range, taking advantage of that recent dip from the stock offering. And crucially, using technical stops, maybe below $13.50, is strongly suggested, just to protect capital if the technical support breaks down significantly.
All right. Before we wrap up, you usually leave us with something to think about.
Yes, a final thought for you to mull over as you digest all this. Joby relies really heavily on its partnerships, right? Toyota for manufacturing, Delta for operations. So the question is, to what extent does this reliance truly reduce their execution risk right now? versus potentially limiting their flexibility or even their commercial reach down the road? What if they want to work with other airlines eventually or bring manufacturing fully in-house? Does that reliance become a constraint later on?
That's a really interesting long-term strategic question. How much control do they ultimately give up for that near-term de-risking? Definitely something to consider. Well, thank you for walking us through that incredibly detailed analysis of Joby Aviation. Hopefully this gives you, our listeners, a much clearer picture to help inform your own decisions. Thanks for joining us on Investing Talk Podcast, and we'll see you next time.